Hello and welcome to the 19th edition of our first weekly, now bi-weekly COVID-19 update. This update is brought to you by the Policy Resolution Group at Bracewell. That's me, Caitlin Sickles, and my colleague Paul Nathanson, who is not on today, but is with us in spirit, and the guys at the Franklin Partnership, Omar Nashashibi and John Guzik, who will be giving you all the latest of what you need to know about government action or inaction on COVID-19 response.
So Caitlin, like I said, give me 1 second. Sorry, Caitlin, I've just got to switch up the PowerPoint. So give me 1 second. Sorry, everybody, for the logistics here. We've got a few of them that have been jumbling around and making sure we've got everything correctly, and we should be good to go. Sorry about that.
No problem. It's all right. Gotta say, 19 episodes in, and this is the first time we've had to reload the PowerPoint. I feel pretty good about that.
There we go. How's that? Now we should be good to go. Sorry, Caitlin.
Yeah, no problem. So yeah, like I said, this is your bi-weekly update from PRG at Bracewell and from the Franklin Partnership. Franklin guys, as everybody knows, are on the ground here in DC representing NTMA and PMA members up on the Hill. Paul and I are doing the communication, working with you all to be in media and in social media. We'll have a lot to report on that front in today's update as well. As always, you can find a recording of this podcast. Guys, we do a podcast too. We'll talk about that too. But you can find a recording of this webinar on our onevoiceinfo.org website. You can download the slides that we use and then also find a recording of this conversation as well on that site. And I am going to turn it over now to John, who will walk us through the agenda for today, hit a couple of highlights about what you guys need to know, and I think also plug our annual survey of members. So John, I'll pass it off to you.
We do want to, thanks Caitlin, we do want to point out many of you on this call probably have received a survey. I think it's your third or fourth survey that we're asking the membership on the next steps for COVID. The survey is remaining open, and so if you've not already completed the survey, I think we've got 70 responses so far between NTMA and PMA. We'd like to get that number over 100. So when you're done with this webinar here, go back to your inbox, look for that survey and get it completed, and we'd appreciate that. That's very helpful because we take that data and turn it around and give it to the policymakers on Capitol Hill and within the administration to give them an idea of what the current situation is with our metalworking manufacturing organization. So today's agenda, we're going to spend some time talking about some CDC guidances moving forward. There's been a lot of questions about testing, and so we'll talk a little bit about that. And then they sent us a guidance to start thinking about how we are going to be handling the holidays with our employees moving forward. CDC issued a social media toolkit. We'll outline about that. There's a court ruling back in August that overturned some of the Department of Labor regulations. Omar is going to spend a little time talking about that, and then how the Department of Labor handled that situation, and specifically how families and businesses need to deal with paid family leave with school situations. We're going to update you on some unemployment issues in Workshare. The Department of Labor's hazard pay guidance move forward. We're going to update you on the Main Street lending program. This is a program that we've talked about nearly on every phone call, and there's been some significant changes there. Update you on where we are in the next stimulus package moving forward, and then finally answer any questions that you have. But don't wait till the end of this webinar. As always, if you have a question during the course of the webinar, ask a question in the box in the lower right-hand side, and we'll try to address those questions throughout this webinar. But those questions that we don't get answered, we will make sure we do that at the end of the webinar. So the CDC guidance on testing. There's been several differing views on testing, and it started because there weren't enough tests out there. And then who should we be testing and who should we not be testing? And as recently as mid-July, there's a CDC guidance that only in rare circumstances should you be testing. yet that policy has changed in the recent September 18th guidance, which you see here, where that there's, we should be doing testing. We should be testing asymptomatic patients, those that have had that virus in the past. And so this just shows how the evolution of the testing world moving forward, and we thought that was helpful for you to know moving forward. The other interesting guidance was how to deal with the holidays. Now, many of us, whether it's Thanksgiving or the holidays in December, we have people over to our house. And how are we going to treat, and how are we as employers and employees going to be dealing with it? And their guidance does not supersede state and local guidances. This is just something for all of us to be thinking about today, is let's look at the community infection rate, not only in your community, but in the communities where your guests are coming from. And so as you plan your holiday celebrations, now would be the time to be looking at it. Where do you get that information? You go to your local county public health department's website, and they will tell you what the infection rate is in that particular area. They also gave some, basic guidelines. Outdoor celebrations are better than indoor, smaller are better than larger, but they don't give any strict guidance on what is the number of people allowed at a holiday gathering, because they are leaving that up to the state and local governments to help make that determination. Then, Caitlin, the CDC also issued this social media toolkit, which should be very helpful for our employers to pass along to their employees.
Yeah, thanks, John. So CDC put out some draft text that you can use. You can download and put on your Facebook, Twitter. They have Instagram. And it's sample copy that you can just copy and paste and put onto your social media accounts. We'll be sharing this content on the One Voice, PMA, and NTMA accounts. So you can grab it there if you'd like to share it from us, or you can download it directly from CDC. There are posts that include just text, and then there's also posts that include video and graphics. The posts really go into 3 categories: mask wearing, hand washing, and social distancing. So there's information about all of those, and particularly on masks, going into what kinds are best and how might they be best deployed in your workspace and in other aspects of your life. So if that is information that you think would be useful for employees, that might be a valuable thing to share on your social media accounts. I will note that early in the pandemic, we created some content for One Voice members that was similar in nature to this, although of course the guidance was different then. And that content was very well received. It was used by a lot of members, and in fact, I think even run in the lobby on repeat of some member facilities. So I think that there's a lot of use for this, and we've seen it be used well when we created this content. I'm also happy to connect with anybody offline if this is interesting to you, but you would like to talk about something more custom for your individual shop or your association. So do reach out. If it's helpful, we can help you customize this kind of content.
Yeah, and I think what Caitlin said also, I think it's not lost on at least us that she did this already for all of you all back in April, and the government's now doing this 5 months later. So it would have been nice if they did it then, but I guess it's never too late. So CDC continues to put out more items. Thanks, Caitlin and John, for that overview. And as John mentioned, as we go back and forth here, as we just said, you've kind of got a little whiplash with regards to CDC. Well, you're now getting something similar on the Family First CARES Act over there as well. I think you all recall that a while back under the FFCRA, the Department of Labor put out several regulations with regards to intermittent leave and when an employee must receive the approval of an employer prior to going out. Well, there was a lawsuit filed in New York in the Southern District there that applied to New York, Jersey, Connecticut, Delaware, and a few others around. That was settled on August 3rd when the judge issued their ruling saying no, that the Department of Labor went too far, especially when it went towards the neat requirement to obtain his or her employer's approval before taking FFCRA leave intermittently, and also making some other changes there. So that's something that's really important to take a look at. and that also the provision required documentation of a need to leave prior to taking the leave. So what it ended up saying is the judge says no, that the Department of Labor went too far, vacated those orders. And so what you're looking at on this slide is the Department of Labor's FAQs that they updated after the ruling came out around the time of our most recent webinar, and you can get a sense of where they took it. Now, the Department of Labor, to address the judge's concern, they first had to admit, okay, then we'll take this nationwide and not just for the primary jurisdiction. And then they issued conforming regulations. It's important to note that these conforming regulations, as with everything in Washington, do not actually conform to the judge's ruling. So they might be subject to change later on, but they did make some changes along with the healthcare definition that you saw there. Most importantly, the employees may take FFCRA leave only if work would otherwise be available to them. So that is not a change, even though the judge wanted to see that moving forward. And so you wanted to make sure that you take a look at the new rules that reaffirm and provide additional explanation for the requirement that employees take leave only if work is otherwise available. If there's no work available to them, then again, they're not taking leave from any work that's out there. That's something we talked about back in the day. The judge disagreed with regard to the approach that they took there as well. Then it also clarifies in the new rule that the employees must provide required documentation to support the FFCRA leave to their employers as soon as practicable. So that's important there, because what they're trying to do is kind of do the fine point between what the judge had and what the initial rule is. The judge basically said, no, you don't have to provide that documentation. They're saying, and you have to do it as soon as practicable. So that's kind of a little bit of wiggle room there. And then the last item, before I turn it over to John on some of the new tax rules that are out there, and this affects those of us with younger children or children basically still in school right now, about intermittent leave. Effectively, the Department of Labor is now saying that employer approval does not apply to employees who are taking leave on full day increments to care for their child whose schools are closed. So let's say that you've got remote learning on Tuesdays and Thursdays, and you know that's the schedule for the year. You don't need to seek employer approval. It's not considered intermittent leave because you already know that your child's school is technically closed to them, as we reviewed in a previous webinar. So again, that's something that you want to watch out for. Make sure your HR folks are aware of it. But John, speaking of HR, especially for those that are in some states where the state has been filing and helping employees get whole through some kind of a Workshare program where employers may have lowered salaries, watch out for this tax hook right here, John.
Yeah, this is very important. And, you know, we need to make sure that our employees know what the rules are in Workshare. Furthermore, the intent of the PPP program was to keep, you know, employees on payroll, and we know many of you were successful in doing that, but others were unable to utilize that and did lay people off, and now are bringing people back. And so this is further guidance from the Department of Labor. Just a reminder that for those employees that start in January of next year, they're going to get a 1099 from the unemployment office talking about the wages that the income that they've earned in the past year and what their tax liability is. And then, so for those employees that you had to lay off and you brought them back, you might want to remind them that tax withholding is voluntary, you know, with unemployment. And so they did recommend go to irs.gov. There is a tax estimator calculator on the website so that your folks who may have had collected unemployment over this past year might be able to estimate what their tax liability is. We're still a little bit away from the end of the year. For those who are still on unemployment and you anticipate bringing them back, you might want to recommend that they file a W-4V for voluntary tax withholding. That would be a 10% flat tax withholding of your unemployment earnings moving forward. So it's just another attempt that we can provide assistance to the employers to take care of their employees that they care so much about moving forward. So, Omar, the Department of Labor also, in the Wage and Hour Division, also issued some guidances on hazard and incentive pay moving forward.
That's right, especially for some of those. I mean, remember early on, folks, when we were talking back in March and April, and the issue of hazard pay would come up quite a bit. And then we started having some of the lawyers saying, be careful on what you call it, especially if it now gets tied into a regular rate. Well, here it is. I'm an employee of a private employer that began paying me incentive payments, such as hazard pay, for working during COVID-19 emergencies. Do those incentive payments have to be included in the regular rate that is used to compute my overtime pay? The answer is yes. Payments your employer provides you to perform work constitutes compensation for employment that must be included in the regular rate. So as you're looking at from your HR side and how you want to put that in there, make sure that they're aware of it. Then also there have been a couple of other areas where the states have also been providing funding. Just as John mentioned, we've got a number of states, I think it's almost 24, I want to say 23 or so, where they do some kind of a Workshare where they help again fill that pay gap, similar here where there might be some benefits that the state or the local government is providing. We know in Alameda County and Bay Area, for example, they are doing direct payments to those that are temporary furloughed and laid off. So there are some additional assistance programs that are out there. But again, making sure that understanding what compensation would be included in regular rate, and this slide and the next one just gives you some clarification in terms of the compensation provided by the employer, the private employer, versus that being provided by the state as well. So again, under FFCRA, only compensation for employment is required to be included in the regular rate used to compute overtime pay. And so that's how they're starting to break down some of the state and local governments indirectly providing incentive payments. So this slide and the previous one really do try to help the employer, especially early on. I think there was a lot of confusion when we were just trying to keep things running about hazard pay. So please make sure you're checking with HR and your CPA to get a lot better detail than what we were just able to show you. This is just, again, a quick top line. It just popped the other day. But John, there's been a lot of confusion. There's another lifeline being thrown out to the Main Street Lending Facility. Let's see if this one gives.
Yeah, so just a reminder, this is the Main Street Lending Program through the Federal Reserve. Loans start at $250,000 and above. And we've talked about in the past, very few banks are participating, very few people have been getting the loans there. There have been several hearings on Capitol Hill, and we talked about it at the last webinar. And this is one issue where there's truly bipartisan support. We hear about the political infighting that's taking place in Congress, not on this issue, not on the PPP issue. And I think they've had 3 hearings in the last 2 weeks. And Chairman Powell, Chairman of the Federal Reserve, got the message. The message from the senators and members of Congress was that they need to incentivize banks to lend, because the Federal Reserve is buying 95% of the Main Street lending loan. 5% of the loan remains on the bank's books, and so the banks have been utilizing very strict eligibility requirements for the borrowers, and that is why very few loans have been granted over the last month or two through the Main Street Lending Program. So last Friday, Chairman Powell heard the message, and his recommendation to the banks was, don't look at the current economic environment of the business, look at the pre-pandemic conditions of the business and the borrower, and let's look at the post-pandemic prospects. So how was the company doing before the pandemic? And if it was doing well, it was at solid financial footing. And when we're looking forward, once we get back to normal business operations, what are the prospects? That should be your guiding light for determining loans. Keep our fingers crossed. We'll be hopeful that this will spur some additional lending into our communities, because we know, notwithstanding, and we'll talk about the extension of the PPP program, but there are businesses out there that will continue to need additional assistance, and hopefully this will be helpful moving forward. So, Omar, what is your prospects on this next stimulus moving forward? We seem to have a stalemate between the House, Senate, and the White House.
Yeah, we try to stay away from politics on this, but John and I pretty much have a saying that policy is driven by politics. And so you really have to understand what happens next. You really have to look at the politics, as we're getting really close to an election here. We're 38 some odd days away from it. It's increasingly unlikely that you'd want to see Senator Schumer hand over victories to vulnerable Senate Republicans that are in North Carolina, Arizona, Maine, especially in Colorado. And so the likelihood that he has a lot of incentive to move a bill right now, it drops pretty much by the day. But on the Speaker's side, over on the House, there is some movement. And I'll let John jump in here in a bit on the next slide, and we can kind of talk the politics of it. But let's just, I guess, start the framework. Nothing's really moved. The Democrats, it says 2.2 here. Now we're hearing that Pelosi might be willing to throw a $2.4 trillion bill on the floor next week, but the White House is still sitting at 1.5, and the Senate Republicans are at 650 billion. So that still tells you how far they still are apart from one another. And a lot of that divide still remains over state and local government and school funding. There's really no incentive for Republicans to go along with that. But the Speaker at the same time is getting some pressure. But I guess before we jump to the process, let's talk about what they agree upon. John mentioned the Main Street Lending Facility. They do largely agree upon the Paycheck Protection Program changes, second round of PPP loans, certain tax corrections, making more businesses eligible for the employee retention tax credit, for example, is on there. Federal unemployment insurance, and we'd heard from one member of Congress the number might be 450. We've heard from another one it's 400, but they might have an agreement on that one. And supporting employer PPE expenses, that's a big priority for Susan Collins of Maine. So there's actually quite a bit they agree upon, and that just leaves the dollar amount. But John, I still think it's the politics of it that's really going to be driving this, don't you?
Yeah, I mean, the dollars do have an impact because, you know, as I think I mentioned 2 weeks ago at our last webinar, you know, there are Senate Republicans who finally got religion on budget deficit, so they're concerned about these big numbers, and that's holding back Senate Republicans. But then what is holding back, you know, Nancy Pelosi? She's got a number of moderate Democrats, frontline Democrats, who were just elected in 2018, and they knocked off some Republicans. These frontline Democrats who are in their first reelection, and their first reelection is often the most difficult, they want the speaker to put a vote up, which is why we were hearing that the speaker may put up a vote next week for a $2.4 billion package. I think they're going the wrong way. I think they should be going lower, not higher. But and so that is one of the drawbacks moving forward. And then what is the politics of why would Nancy Pelosi give President Trump a victory with another stimulus package just weeks before the election, especially if this agreement includes direct payments to individuals where President Trump could put his name on a check going out to individuals. But quite honestly, the politics works on both sides of the aisle. I just don't want to blame the Democrats and Nancy Pelosi. I mean, Republicans do see a benefit of not having moving a package prior to the election as well. So where does that leave us? Well, it depends on what the outcome of the election is. The Congress did pass a continuing resolution to keep the government funding. The House passed. The Senate's going to pass it shortly this week or early next week to keep the government funded through December 11th. So that's another trigger deadline moving forward. Do they, after the election, House and Senate and the White House come together and attach a COVID-19 package to that next spending bill that keeps the government open after December 11th? That's a dangerous prospect moving forward, because if it falls apart, we're shutting down the government just before Christmas. It also, I think, is going to be determined of what is the outcome of the election. If Joe Biden wins and the Democrats win control of the Senate and Democrats maintain control of the House, they just may vote for a continuing resolution to keep the government funded through February and not deal with it. However, if Republicans maintain control of the Senate, regardless of what happens at the White House, I think there's going to be more motivation and incentive to cut a deal to perhaps tie a stimulus bill to the next spending bill moving forward. Again, there's differing views in Washington. Omar, what do you say about that?
So what we're hearing, we're on a call with two different parties actually yesterday. One were the Blue Dogs, and they were saying that they're really getting antsy and they're putting pressure on the speaker. They've got to do something. These moderate Democrats, to John's point, around Chicago and Dallas and Houston and Southern California, those are the moderate makers there. They are worried, and they do need to at least say they voted for something, even if it doesn't become law. And so that was the pressure point that was coming. And what happened was Republicans picked up on a lot of these vulnerable or moderate Democrats saying, hey, we've got to vote. We haven't taken a vote since May 26th on anything, and that was the HEROES Act at $3.4 trillion. So now what that does is that Republicans this week realized, well, maybe they can put Democrats in a bind by moving forward with what's called a discharge petition that they were starting at 9 o'clock this morning. What that would require would be a majority of the House to move forward and say, we want to move this bill regardless of what the speaker says and bring it up for a vote. Now that would have to take, I think, about 23 or so Democrats to join, and I believe they only had about 12 or 13 is what we had heard, willing to sign their name if they had commitment to actually have this thing move. So in response to that, that's where Pelosi's coming back, and what John mentioned, next Wednesday we might see a vote on a $2.4 trillion package. What do we read this morning, John? They say if you actually see a vote scheduled, that means there's no deal. If the vote gets pulled, that means there might actually be a real deal coming after all. But no, I think this is for show. We had a question come in that's very timely. I'll let John jump in, which you already touched on a little bit. Employees are asking this employer, will they be getting another $1,200 from the Fed? And do we have any information on this? Well, as of right now, the language inside the House bill that they'll put on the floor next week does have another round of direct stimulus spending. We do know the president does want another round of stimulus spending, and that's exactly why the speaker put that in. This is her effort to divide the GOP from the White House. So if there is a bill then that the president signs off on, we understand that's pretty much the reason he wants this. Wouldn't you agree, John?
Yeah, I do agree. I am not optimistic that these direct payments will be included in a package that's voted on prior to the election, because that's, as we said earlier, handing the president a victory just before the election. If it's done in mid-December, part of a package that's done in mid-December, I do see direct payments being included in such a package. I mean,
yeah, but I think my point is next week is a show vote for Democrats. Yeah. So they will include it in there. There will be a vote on a bill with direct payments prior to the election, but unlikely at this point to be signed into law.
Yeah. And the other thing we need to lay on top of this is the Supreme Court hearings and the appointment moving forward. That is adding an additional layer of political partisanship on top of everything else that's moving forward. And so we just need to keep that in mind as these discussions move forward. Secretary Mnuchin and Speaker Pelosi are talking. That's the positive. Can they get to a deal? You know, what does it take to get them to a deal? And then the question is the timing of the timing of the deal, and then what is in that deal. So we will be continuing to push.
I'm with you. But so, Caitlin, what's the media out there? What's the saying, and what are our members hearing as well?
Sure. So you guys will be unsurprised to know that we're getting a lot of press inquiries, which is not unusual, but we're certainly getting more in the lead up to the election as members of the media want to know where manufacturers stand on the issues of the day, and also how the president's policies stack up for manufacturers and what manufacturers might think about a potential Biden administration. So it's a delicate line to walk, but we've had some members do some interviews. We had members recently speak with Bloomberg. We have members speaking with Fox this week. And then we have an inquiry from the Wall Street Journal, which I believe we've circulated, but I'll flag it again here for the group. We have a reporter there who reaches out to us frequently, who wants to talk to a manufacturer about 232 tariffs. It's not a election specific inquiry like some of the others, but of course it has election overtones as everything does this close. So if there are folks who are on this call and who are interested in speaking with the Wall Street Journal, who want to talk about the impact of tariffs, let me know or let Paul know, and we will connect you. And thanks as always for the many members who willingly respond, open up their facilities, take the time to talk to journalists. It's very helpful for getting the message out to media, and it's also helpful for Omar and John when they're on the Hill, if they can point to media coverage and we can be a part of the narrative about the policies that Congress is considering. When we can get that printed in papers of record, it's very helpful for us. So we appreciate people taking the time to think about media and talk to us about it. And one more thing I will note for you, and I think this group, everyone on this call knows this well, you're not flying alone if you agreed to do a media interview. In the case of the Fox interview scheduled for this week, the people who had volunteered, we provided them with some talking points. We made ourselves available for phone calls if they were interested in talking through them and thinking through best practices for managing interviews. All of you know these issues well and you know your businesses well, but still interviews are not conversations. They're an opportunity to advance the message, and we're always around and available to help you do that if you would like to speak to media in the future.
So for those of you who have not filled out the survey, as soon as we conclude this webinar, we hope you'll look in your email and complete your survey. For those of you who have completed the survey, I hope you will talk to your finance person and encourage them to write a check. You can write a corporate check to either NTMA's GAF, Government Affairs account, or PMA's Advocacy Fund. If you liked what these webinars have been doing, like what we've been doing in these webinars for the past several months, probably since March, the GAF and the Advocacy Fund help underwrite our advocacy efforts on behalf of both associations. And we recognize economic conditions are difficult right now, but if you found the material that we've presented to you very helpful and helpful to your employees and helpful to your HR departments, I hope you will say, okay, PMA and NTMA, thank you. Here's a corporate contribution to help move this process forward. We can always accept personal contributions, but unlike the PAC, which requires personal contributions, the Advocacy and the GAF funds take corporate contributions.
Thanks, John. And let's just round it out as we're just here on the half hour or so. So with some questions, we answered the $1,200 from the Fed already. The next one comes to the $150,000 threshold. Our bank opened a portal to apply for PPP forgiveness. Do you still think Congress will be approving the blanket forgiveness for PPP loans under $150,000 without the need for completing an application? Our understanding, and this is as soon as yesterday when Mnuchin testified up on the Hill, I might have been Wednesday this week, Mnuchin basically said if you're under 150,000, his recommendation, not ours, from the Treasury Secretary is to, yes, start assuming and getting your paperwork done that you'll have it automatically forgiven and get that in and get that filed is what the Secretary recommended. What we are suggesting and what we are hearing is they're not going to give automatic blanket forgiveness. You still are going to, if you're under 150,000, going to have to maintain a certain level of documentation, in particular in light of some of the fraud allegations that have been coming out for a number of different stories you've seen in the media recently. So on the 150,000, they are encouraging, at least this is the Secretary himself, encouraging banks and borrowers to go ahead and start moving forward if you're under 150, but start following exactly what they've already prescribed for you in terms of the documentation, just that you got to keep on record for 3 years, et cetera. So that's what we understand on the 150,000. We're going to combine that answer with skip down to another question that we received. Our bank still tells us that they are waiting, so meaning their portal is not open to its customers to submit PPP loan forgiveness applications. They claim it's because the SBA has not finalized forgiveness forms and that the SBA might change the rules. Is there merit to what the bank is telling us? So again, you're seeing exactly two different scenarios where one lender is accepting forgiveness applications and the other one is not. What we understand is that, and this just came out, and just a quick aside, is in terms of the forgiveness applications, the Community Bankers Association said on average, the forgiveness application goes back to the borrower an average of 4 to 5 times, meaning there's questions that go back and forth. And so that's part of the reason why it sounds like the Treasury Secretary yesterday told you 150 and under to start getting start talking to your lender on that front. So from the standpoint of if you do not have a portal open, yes. What we are hearing is many banks, particularly larger ones that are looking at maybe processing 35,000 plus applications. No, they're not going to open a portal until they are confident in what the final rules are, because their concern is if they build something now, they might have to rebuild later. So these are two different situations, but they are just a function of the reality of your lender, frankly, and then just how it goes with the SBA. Similar question we also received with regards to 100% of spending, or we spent 100% of our loan proceeds on qualifying expenses within the 8-week period. When we ultimately submit our loan forgiveness application to our bank, is there a downside to submitting documentation for more than 100% of eligible expenses? This one, I don't necessarily have a regulatory guidance answer, but it would be more from your lender. You want to make sure that you're not creating confusion with your lender. You also want to make sure that you're not trying to pass off as if you're trying to get over reimbursed beyond the amount that you were allotted in that 2.5 times. So we just want to be a little bit careful, understand that you want to fully demonstrate in case something gets bounced out, but it sounds like what the banks are doing based on that Community Bankers Association comment from this week, that they are having a dialogue. So once you submit it, expect to probably get a pass back from your lender to be able to answer some of those questions there. Another one, do you know if the Main Street lending facility can be used to refinance current loans? The answer there is yes, of course, with conditions. There are 3 major aspects to the MSLF. There's a Main Street lending new priority, there's an expanded priority, and then there's one more that I'm forgetting for the really, really big guys. But the answer is yes, you can restructure existing debt under the Main Street lending program. It's called the expanded program, I believe. So if you just have to go on to the Federal Reserve, just type in Federal Reserve Bank of Boston, it'll pop up, or you can go to our previous slide on this issue and you'll be able to find a lender, because your lender may not be participating in that program, as John has mentioned a number of times. Lastly, and I'll get John's take on this as well, do the tax corrections include expense deductibility with forgiveness? So what this reference is to IRC Notice 2020-32 with regards to whether or not you can deduct as expenses under if your loan is forgiven. The IRS has issued a notice saying that no, if you have your loan forgiven, you cannot have your expenses deducted as you normally would, including wage, et cetera. But in this case, Congress has said it is our intention that you should have been able to expense those deductions. So this is where we have an issue right now, and I'll let John fill in on his intel from Treasury, but our issue right now is you have the two Democrats that lead the tax writing committees in the House and Senate, they're on board. The Senate Republican is on board. The House Republican is not on board, and so this was not in the House Republican bill that they're moving today. We heard yesterday from the House Small Business Committee they could not put in the language to deduct it because, again, it would have drawn opposition from the committee. But John, what did you hear from Treasury as well? And I think that's still constant.
Yeah, so a former staff member who worked on the Ways and Means Committee that Omar and I have worked with for a number of years moved over to Treasury, and it's like, oh, this is great. We'll talk to him about the deductibility of expenses. So we reached out to him, and he was not very interested in having much of a dialogue. He thought this was double counting, and why do we need to do this? Blah blah blah, the same old arguments. But to Omar's point, the administration has a different perspective, but the leaders in Congress, the tax rating, the critical tax rating committees, 3 out of the 4 chief support the deductibility of expenses, and we believe in any final bill moving forward that will include a PPP and other stuff, and the extended unemployment will include a correction that would allow the deductibility of expenses.
Yeah, we've heard directly from Senator Rubio's committee staff on the Small Business Committee that we knew before he chaired, and basically they're saying, you guys, you need to play, this is going to be a Democrat play because Brady, the chairman or the ranking Republican in the House on the tax writing committee, he's opposing it to go along and support the administration, and as are some other members on that committee on the Republican side. So we're being told if this is going to be in, it's going to have to be in from mostly from the Democrat lead with the blessing of Grassley and just roll Brady and Mnuchin. So yes, we're still pushing on it, but again, this vote today that the Republicans are pushing and the one that Pelosi will get through next Wednesday, these are largely for posturing and for show. So when we were speaking to the House Small Business Republican yesterday, he said, no, I don't think too much of it that we didn't have it in our bill. We were supportive of it. We just couldn't have it in. So, but I think John's correct in the final bill. If we do get one later on, we do expect it to be in there based on intel we've gotten. So with that, I don't see any other questions to one of you all that asked the one other. We'll reach out to you directly to answer that one in that specific case. If there's no other questions, always feel free to type them in on the right-hand side. Feel free to email any of the 4 email addresses you have there. As John mentioned, please do support your trade associations. They're here for you now more than ever. There's links down there and the below. And we will keep you posted if anything comes of any legislation in the coming days and weeks. Thanks, everybody.
Complete your survey.